And healthcare stocks pulled the broader market lower on uncertainty over the fate of the Republican-backed healthcare bill. Energy stocks were also down, offsetting the gains in financials. The Dow Jones Industrial Average lost 15 points to 20,934. The Nasdaq was up fractionally, and the S&P 500 was off 3. And with the Federal Reserve meeting now in the rearview mirror, investors are asking what's next for stocks. It's a simple question, but as Bob Pisani explains, the answer is a bit more complicated.
Stocks have cleared 2 of 3 major hurdles in the past day, but the final hurdle may be the most difficult one of all. We saw a market-friendly outcome from both the Dutch election and the Federal Reserve meeting. The Dutch appear to have turned back a populist tide, and the Fed has calmed rate hike jitters by clearly implying rate hikes would continue to be gradual, which means 3 hikes this year and 3 next year. Now, the market has convinced itself that it can keep going, even though the Fed is changing its stance from being data-dependent to keep raising rates for a while. That's a big change. But that's only happening because of the last hurdle, the Trump rally, this magic elixir of tax cuts and lower regulations and infrastructure spending that has arguably been the main driver of this rally. The question is, has the market already discounted the full effect of Trump's proposed policy plans? My opinion, not at all. There's still plenty of room for stocks to rally. It's one thing for the markets to move on vague hopes for pro-growth plans, but it's another when you actually see real numbers. And we don't have those numbers yet. And when that happens, I think we likely will get a second boost. Thomson Reuters estimates that cutting the effective tax rate to 20% from 26% now would boost earnings 8.7%. That's a huge jump after several years where earnings have been declining. The market has rallied on these expectations, but don't kid yourself. No company has changed their guidance, and few analysts have boosted their numbers so far. When it happens and they change guidance, that's when the second boost can occur. The downside is that if we get a smaller loaf than expected, especially a much more modest tax cut, the market will be disappointed. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.